Hey, good afternoon, ladies and gentlemen. Hope you're all doing well. Welcome to the CPI live event this afternoon, where we're expecting, fingers crossed, some bloody fireworks from our markets. Let's hope so, because it's been a complete grind fest so far this week, and it's been difficult to try and find anything. So, fingers crossed it's going to be a good one. Good afternoon, Matthew. Hey, guys, could you give me a quick sound check, please, just to be sure I'm coming through? I don't want to be talking to myself for half an hour. Excellent. Fantastic. So, good to see you, Ian. Hey, Scotty. Hey, Kelvin. Hey, Matthew. All right, team. And so, as you well know, or hopefully, as you well know, today is, of course, CPI Wednesday. We have the full batch of inflation data, monthly and annual inflation rate for the core, and we also have the monthly and annual base rates. All are coming out in about 8 minutes time, so we're going to have to really pick up speed here and get cracking on. We are looking at stable across the board as far as the forecasts are concerned, with a 2.6% figure forecasted for the base annual inflation rate for the US, which is a 0.2% increase. Now, this is the most closely regarded one by the Federal Reserve. So if this comes correct and comes true, then we're probably going to see some pretty explosive moves to the downside in the stocks and a bit of a bullish rally, at least temporarily speaking, for the United States dollar. And that's it in a nutshell. So enough of that. Let's get over and have a look at our assets, see what we're doing today. So in these events, I really like having a split bias, right? So if the market goes one way, we're in. If it goes the other way, we're in as well. And not really having a fixed bias. In terms of gold at the moment, this is a large intraday position. So what we're going to do here, guys, is we're going to remove that pending order. So for those of you who are in the sessions with me daily, we're going to remove this pending order from the market at the moment. We're going to focus purely on very short-term day trading tactics here. Strategy for today is to be in and out as quickly as possible. The trading margins for gold at the moment are very tight, which is nice for us. We've got good low, good high to work with, and we're essentially looking for positive imbalance or negative imbalance to be completed either side of these highs or these lows. So at the moment, we're going to look at the ceiling in gold, which is going to be approximately here, and we're looking at a potential floor in gold, which is going to be about there for me. I mean, we've got this area here, probably could classify that as a fake out, couldn't we, at the move? And really, we've got this low and this high. So these are the margins that we're working with. So if you were to consider this being the trading range, we're either looking to go long from the lows or short from the highs. I don't actually like where gold's trading at the moment. Regardless of that fact, CPI is going to really push this asset. So what we're going to do is we're going to have a fixed 1 to 2.5 here. So we're going to have a nice stop loss, which is going to be approximately here. And we're looking basically as the entry being the break of structure point for these highs. So we're going to have a stop loss like that. We're going to have a 1 to 2.5 risk yield position above. And the reason we're going for 1 to 2.5 and not fixed 1 to 2, FYI, is because of slippage. When the markets move, the spreads increase, and you also will get a late entry. So even though we're going to be going for a really nice aggressive, let's have a 1 to 2.7 here, for example, we're not going to get in until a 1 to 2.2. And we will lose that on the slippage, which is why we always account for the slippage in the trade itself. Okay, so that's the first one I'm going to do. For the short side, I'm going to be looking for areas down here that have been utilized by price action quite a bit in recent history. So for example, that one there, I'm just going to highlight this so you guys can all get a really crystal clear picture of what's a crack-a-lackin' down there. So that one there, this has been utilized quite nicely. We've seen many points of indecision throughout price action here over recent history, which means we have a, generally speaking, path of least resistance between points A and points B. So we've got the risk of the TRF. The TRF is at around 26. I'm not really too fussed about the TRF at this stage because of the catalyst event that we are discussing today being the CPI, of course. So what I'm going to be looking at here is the breaker structure point underneath this area, which goes back through there, as you can see. Target profit's going to be at 25.97, and my stop loss is going to be down there at about this point here. And that's going to yield me a 1 to 2.8. Now, I'm only, again, actually expecting a 1 to 2. because of this slippage. It might be a little bit better, it might be a bit worse. We don't know until obviously we see the aftermath of it. So that's going to be the two trades on either side of gold at this stage. Now, we've got 4 minutes to go, sorry. So we're just going to quickly flash down to the NAS 100, get a look at the trading margins in this one. So NAS 100 at the moment, still pretty good, still like recycling these old zones. These are the same ones we've used for the last 3 trading sessions. Unfortunately, with the NAS 100, it's kind of already triggered, but that's not a problem. It's only just happened, so I'm not too concerned about this. I think for the sake of today's trading, we'll probably utilize this area in here as the breaker structure. This has been provided to us via the high, the low rebound, the high retest, and the trade idea is going to be executed just above this area in here. We're going to have a target profit up there at around 21,097 with the stop loss here at around there. So that's a 1 to 3. Should this trade idea trigger and then pop up, we'll probably get a 1 to 2.5 out of it. For the short of the NAS 100, I'm going to go for, let's just double check here. So we've got the base of a W reversal in there on the 1 minute time frame. We've got those two lows as well. And then we've got a really nice point for a target profit down in here. So let's utilize that. That's a big drop, but I'm going to go for that regardless. So the short is going to be a break of structure below this point in here. And then I'm going to have the target profit all the way down there. And the stop loss is going to be above there. That's a 1 to 3.35. Okay, so we've got about 3 minutes to go, folks. Good afternoon, Braden. Good to see you, buddy. We've got about 3 minutes to go here, folks, until the news event's released. Let's start hashing in some of the numbers here. I think the stocks, I'm going to have a pending order in the short for the NAS 100. The long's going to be a market order. I'm not going to bother on the Dow Jones today. I'm just going to focus on those US tech stocks. So market order for the long, pending order for the short, and the other is pending order as well. We've got a couple of minutes to plug those numbers in. So let's get going with that. Okay. Alrighty. So 261354 2669 2611 2674 602 and 2597. Okay. Alright, we've got a minute and a half to go here for the numbers. Okay. That one's alright, 30.988 and 2104.265. Okay. Alright, cool. Now, just for the... Okay, we've got about a minute to go here, folks. Just to confirm, if the market is inside the trade idea that I've outlaid here, the market order I'm going to be carrying out on the NAS 100, I won't be taking it. Okay, so like this, for example. This is a bit of front running that we're seeing at the moment. Could be giving us an indication of the data. Okay, we could be going for a long breakout. If that's the case in the NAS 100, I will not be taking the trade now. It's as simple as that. I'm only going to be taking the trade idea if we're trading back down here at the point the data's released. We've got about 30 seconds to go. I don't know at the exact period of delay from my voice getting transferred over to your side of the screens. So I can't confirm, obviously, when I tell you the data if you guys are going to get it at the exact same time. Okay, here we go, guys. We've got about 7 seconds to go. Well, okay, so the data was exactly as expected. That's strange. A little bit strange, I would say. But it's all exactly on point. So, as expected, a 2.6% a 2.6% base annual inflation rate for the US. So, slight uptick there in the most important one. We have a 0.2% monthly inflation rate. We have a 3.3% core inflation rate and a 0.3% monthly core inflation rate. So as it stands, inflation hasn't gone anywhere on 3 out of 4 metrics, and on the fourth, the most important, we actually have a 0.2% increase. Now, I should imagine, so that's that. That's TP done. I've just been looking at gold. Where did I get in? All right, so my order was triggered at 2614.25. So that's not too bad. 2614.25. Oh, yeah, no, that's terrible, actually. So, listen, hey, I'm not going to kick a gift horse in the mouth. The bottom line is, got a 1 to 1.7 out of it. That's about as good as it's going to get today. The NAS 100 has actually rallied. Let's have a look quickly at the Dow Jones. So the US stock markets have actually rallied with gold, which is really interesting. What's the DXY doing at the moment? So DXY is not moved anywhere. So the only thing I can assume here, just thinking about very basic market dynamics, everybody prices in what they can based on the analyst expectations. So the news came out exactly as expected, and so therefore what we're looking at here, especially in these stock markets at the moment, are a lot of shorts being removed from the market. So a lot of shorts, a lot of money was just pulled out of shorts in the market. That sent the market in a bit of a volatility strike to the upside. But the bottom line is, the data is not pro-bullish stock momentum. So what I expect is going to happen, my bias, is that we're probably going to get the sell-offs from over these highs. Now, I don't want to be selling into the stocks at the moment, because look at this NAS 100, for example. We're still trading on top of liquidity here. But what I can do is I can set myself up for a short. So if we look at the highs here, that is a really nice point of a breaker structure area, right? So we've had a double top, reversal going down. We've come to this area here, and then we've charged up from the news event today. What I'd potentially be looking at here is the short between this area and the point of which I was going to take the trade from previously, which is the 1 to 2.5. As the market's digesting the data and we're settling down a little bit as well, you won't struggle with the problem of slippage, like our gold long, which hit TP and then came back down again for a 1 to 1.7. Again, I'm not going to turn my nose up at that because the event has generated revenue, but yeah, the slippage really does nail you on these events if the market jumps up, jumps up bad enough. Really interested in gold though. I mean, I thought there would be more follow through. I really did. Gold spiked up 26.1870, achieved. Now we're coming back down again. It's strange. It's just it's really strange to see gold not really following through on that data. I was sure that we would see more from gold. I suppose gold is reactive, similar to the stocks, isn't it, right? So we're going to have that initial spike up because there were probably more shorts than longs priced into the market. And so therefore, when the data comes out as it did, what's the dollar doing at the moment? Jesus, man. Dollar's literally just not fussed at all. It's not doing anything. I'm just going to keep my eyes peeled on this NAS 100 because I've not plugged this in as a pending, or maybe I should, and then we'll look at something else. Okay, this is a nice break, close, and retest that we're actually witnessing here on the NAS 100. The breaker structure has been pretty decent as well. It's not really trading worthy. It's not really trade worthy, but it's going for it, isn't it? All right, I'm going to plug that short in to the NAS 100 here, team. Actually, I'm going to put that in as a pending. And then we'll move on and have a look at some other bits and pieces, see what's going on. And based on the daily change at the moment, it doesn't look like too much is happening. And US pairs have been, frankly, completely unscathed. USD CAD is break even. The USD Chef is break even. And USD China was already down 0.28% or something, so that's hardly moved. USD yen is break even. USD Sing is just under break even. It's not, they've not really done anything. That's the only problem with things like this, isn't it? You know, you get excited for it, you get all pumped up, and you want to put on a good show, obviously. See some action, and most of the bloody time at the moment, it's a complete anticlimax. But yeah, it's all right. It's what happens, especially this time of year as well. Is everything's starting to die down, things are quieting off. Not much you can do about it. You just got to take what you can. Right, let's go. Naz is in. I'm going to let that be now. What will be on that one. I'm only going to leave the pending order in until the end of this stream. Okay, so just to repeat that, this order is only staying in the market until the end of the stream, because at the end of the stream, you guys are also going to have a full US breakdown for the afternoon session, and we don't want any pending orders in that, which is essentially going to be conflicting that information. So we'll get going and have a look at, have a look at what's going on elsewhere. So right, let's have a look from the top then. First of all, we got. I'm definitely actually not going to be bothered with that. Let's have a look at natural gas, 15-minute time frame. So not moving at all. UK oil. Oh, guys, this is a sorry state of affairs. There's literally not been a single muscle moved in UK Brent. Crude. Okay. Nothing at all has happened for the past 3 days. Gold is gold. I tell you what. Credit where credit's due. That was a great place for a TP, wasn't it? Yeah. I knew it was going to go there. I knew it. That's the best thing about today so far, I think. Aussie Cats had a decent move. Oh, actually, well, can I say decent? I mean, it's moved, I guess is what I'm saying. There's still nothing there for us, though, at this moment in time. Oh, no. Well, that is what it is. That's already online. No. Where did we get to in our breakdown? I think it was about the Euro NZD, wasn't it? We're starting to get a little bit of a push here. No. Right, let's have a look at GA. Okay, so GA's got some potential. So first and foremost, I love this retest. It's been building, obviously, up in here. So lots of orders entering the market. So all we're doing now is essentially waiting for that negative imbalance to be confirmed, which is always it's a really nice place to be. It's a really nice place for the price action to be for a trader, from a trading perspective, because then we know it's coming. We know it's a matter of time. And we've got some really nice structural points in here as well that can certainly be utilized. So essentially in the middle of here, we've got a bit of a no man's land. We've got a margin on the outside, a margin on the inside, or the lower and the upper halves. And all of these are relatively good trading margins. We're talking very, very short-term intraday positions here. So the strategy for this one is very much like the CPI event this afternoon. Altogether, it's going to be very quick, minimal time exposure, and we're just looking to get in and out. Now, both of these orders can be set up via pending order styles as well. So we're essentially looking for the breaker structure point for this one, which is going to be, let's just have a look back in time. Let's just have a look at what this means for our position should we take the breaker structure above there. So if we utilize that as our entry strategy and then a pending in above there target profit and our stop loss, then that's going to yield us a 1 to 2.05, which is great. I like that. So that's going to be one position. For the short, the break of structure point for entry is probably there, I would say. So let's drag that one along. And then we've got this relatively decent trading margin, which we've seen successfully completing twice over. So then we're looking for our entry just below, target profit, which has been nicely printed exactly where we're looking for, and the stop loss, which is a nice margin above the breaker structure point, and that's yielding a 1 to 2. So really, really nice. Okay, they're the kind of setups that we want. But that's not the only thing that we can do because of the fact of this trading margin here. The reason I left this till last is because I'm not absolutely sure it will work out once we look at entry criteria. So for example, that's an entry for the short, and for the long, where would we be? Possibly about here for the long breakout. We've had a couple attempts, but at the end of the day, I don't think we're going to suffer a stop loss. Let's just have a look to see what the risk yield is on the proviso of that. So if I have my stop loss there, that's going to be a 1 to 1.7, which is basically the lowest kind of risk reward we want to go for. If we have our stop loss a nice margin below the breaker structure point, that yields a 1 to 2.42. But can anyone that's watching at the moment tell me what the increased level of risk is with having the stop loss here and not at the 1 to 1.7 point in terms of risk profiling our setups? Yeah, it certainly would have. Yeah, it would have been stopped out previously. Yeah, because not only do we have, if we study this recent price action, not only do we have this cluster of lows in here, but we also have multiple attempts at it throughout time. So if we highlight each of these areas like this and then drag that along there, that is, the stop loss is nowhere near covering up these high risk areas. So we run the increased chance of this being a waste of investment. And so therefore, if we had the stop loss down there to cover off all of those lows, then we would essentially get not one, but two levels of defense and have layer of defense when we execute the position. Now, this is actually yielding a 1 to 1.83. Now, a 1 to 1.83 for me is, I think that's great. That's absolutely fine. I'm happy with that. So that trade idea works as it currently sits right there. The stop loss isn't much lower, so you might want to go down to the 1 to 1.7, 1 to 1.75. But so long as the stop loss has some kind of margin below the lows that have been generated in this area, you should be okay. You should have enough layers of defense for that to bounce back and be quite a nice position. Now, this big candlestick closes in 1 minute and 10 seconds, which means that the break of structure is going to be skewed if it just instantly contracts. So you do have to be aware of that. There has to be a structural point here for, to work. So essentially what we're doing here is we're looking for those structural points, not on the most recent move down, but that's why we're looking at all of these areas back here and studying the previous price action. So then for the short is pretty much the same thing. The only problem is with the short is because of where the breaker structure point is. This is the high risk area up here, which is where we've sort of reached a couple of times. And in order to take that short, the risk reward yield is going to be too small. So the entry is going to be there, the target profit is going to be there, and the stop loss is going to be up there. So at the very best, you're looking at a 1 to 1.23, and we don't take trades that have a risk yield at 1 to 1.23. So the short doesn't work. So now what we've done in the GA is we've generated a bunch of trade ideas, all within the margins of the moves here, which are all looking relatively good. We've assessed where the best breaker structure entry criteria are, and we've also been generating some pretty strong risk profiling as well. So, defense of your accounts, protecting your protecting your fund value. So that's all good stuff. So the GA is going to be highlighted as a blue because, frankly, there's a ton of different trade ideas in there. We're not going to have a fixed bias in one direction or the other. So let's carry on then. Pound against the CAD. Nice flag at the moment, so that's quite decent. Let's have a quick look at this one. Actually, I'm not going to use that. Let's use some old-fashioned trend lines. So we got 1 and 2. So really nice little flag there. And we have the big inflection point. Okay, so this is an inflection point for those of you who aren't around on a day-to-day basis. It's a big area where the institutional liquidity has changed hands. So we have the bears, and then we have the bulls. So then when we go across here, we have a predisposition to price action coming down to an area and then bouncing back. So what I'm going to do here is look at the margins between the bottom of the flag and then look at the margin down to 177.27 to see if that's tradable. Now for me, I have to look at the liquidity first and then the breaker structure from the flag. So if I look at this being, let's say that this is the sort of best area for the flag low, right? I would say that. It's got the most establishment. So then if I'm looking for a breaker structure or a break, close, and retest, which we don't know yet, I'm going to be looking, as I always do, at the intricacies in the price action to see what's been retested the most amount of times. So that would be this area in here. Now we've already had a go at this, but this is the news event candle, granted, and this is the pound CAD. Neither one of these assets is directly affected, but I really like the idea of this pound CAD short. So I would put the entry a bit below where this sort of dip down is. Target profit is going to be all the way down there. The stop loss is going to be a nice margin above here, and that's a 1 to 2.62. Now there is something to consider here. The bottom at the beginning of the pullback is there. Okay, that will be representative of what I call a TRF, which is a technical risk factor. We don't have any fundamental risk factors, so that side of the risk profiling stage is completed instantly because we know there's nothing that's going to affect us with the pound or the CAD today. But we do have a technical risk factor, and that's an area that price action is likely to bounce back. It's not the place price action will bounce back, but it's a place. The place, expectedly, is down here at this big major inflection point, which you probably be able to see on the daily time frame. That's probably a daily point, right? So if we flash up here to the daily, just to confirm, we look down at this point here, and there you go. We can see it really nice and clear on the daily time frame. Big inflection point. And so I expect we're going to come all the way back down there and then continue the range. So based on this information then, pound CAD short, entry at 177.64, stop loss 177.80, and finally the target profit, which is going to be at, I would say, just to be sure, yeah, and the target profit is 177.28. But yeah, I mean, you could go for 177.30 to be honest. I'm a little bit of a OCD freak for round numbers, so yeah, 177.30 makes me feel a bit better. And that's going to yield you a 1 to 2.7, 1 to 2.47, sorry. So again, another really nice trade. In terms of the long, I don't want it. Now, can anyone tell me in the group this afternoon why I just instantly would be against a long from here, from this area where we're looking at the moment? Let's say, why would I be against a long even if we broke 3 of that area? So imagine price action ramps up and we start breaking through here. Why would I still be against a long? Yeah. You guys know what you're doing, don't you? Hey? Yes. You guys know what you're doing. You know what you're doing. Exactly. That's right, because the plane hasn't yet landed at the airport, hasn't had a time to refuel before takeoff. So the chances are if the plane takes off from here, we're probably going to crash and burn down here somewhere, which is going to be right back where liquidity is. Because this is what's attracting price action. This is where the orders are. This is where the money is, not here. So that's why we have these biases in the first place. So good job, guys. Yeah, you got it. You nailed it. So that's exactly why we're going to continue our short bias with the pound CAD. Short. Right, let's have a look at the pound yen. Right, I'm gonna have to watch my pound exposure here. We've got mixture of different ideas in the pound Oz, obviously. The pound and the pound CAD is a singular bias. Let's have a look at the pound yen, because unfortunately, or maybe fortunately, it depends how you look at it, but the pound yen is also looking actually really nice at the moment. I wouldn't say it's looking really nice for shorts necessarily, but it's certainly looking nicer for the longs. I'll weigh that up against cable. Cable's looking like an almost carbon copy of pound CAD, but much more heavily reliant upon the CPI this afternoon, which has done nothing. Absolutely nothing. I'm actually astounded. The dollar is completely unfazed. NAS 100 came up to yesterday's liquidity point as well. I should have seen that coming, really. Had the short from up there. That's on me. What about gold? Yeah, that's fine. Yeah, okay, cool. Right, let's get back to it then. Cable. Let's have a look at the daily. Right, okay, daily time frame. What's out there? So, big move down through liquidity. We've broken the ascending level, or we've broken a ascending level, I should say. I'm not really liking this at the moment. The price line is right inside a big daily point, so I'm not really willing to put money against that at the moment. Let's have a look down here. What's Kelvin sending in? We've got NZD CAD. So Kelvin's going long in the NZD CAD. Looks like a nice setup, to be fair. It actually looks really nice. What's the bottom one? NZD CAD on the 1 hour time frame. Yeah. Yeah, looks good, man. I like that. Yeah, it looks really nice. So we've certainly got a good point trading away from. Yeah, so we've come down. We've collected the funds down at the lows here. The next major inflection point. Let me just do this for a minute. I'm sure, Nadia, you'll enjoy this one. Where is the next major inflection point above price action? That question goes out to everyone, not just Nadia, but where's the next major inflection point? Just for those of you, if there's anyone who's unsure of what an inflection point is, an inflection point is the turning point. Kelvin, 83,080. So 83,080 is there-ish. Okay. Anyone else? Anyone else got any ideas? I'm not saying that's wrong, by the way. Just above 85. God, bloody hell. 85? $85. 83.50. Gotcha. I was thinking, my God. Are we looking at the same chart? No worries. That's all good. So, 83.50. Okay, so we've got a Nadia at 83.50-ish. That's about there. Don't worry, guys. I'm putting raise down, but I do understand that we're talking about zones of areas here. But just for the sake of keeping things clear, whoops, we'll use raise. And we got Braden at 83.65, so just a touch higher. Yeah, so I see what you guys are going for there. Yeah, so that's that one. Matthew at 83.20. So let's go down 83.20. Matthew 83.20. So basically just above where Kelvin is. That's there. And then we've got Ian. Well done, Ian. Nice one. 83.65. So 83.65 somewhere in between. Yeah. So I understand where you guys are going for there. Yeah, I can see that. That's basically the zone, isn't it? Right. So that is basically those three lines there would be the zone for that area. Okay. So thank you for the answers, guys. Appreciate you you all getting involved. So there's only one person out of you all that's actually come pretty close to the correct answer. No one got the actual right answer, but Kelvin was the one who gave me the answer I was looking for. If we're looking, the question again, just to repeat the question, which is the closest inflection point above price, which is the nearest major inflection point above price action. Okay, looking at the piece of price action that we had access to, so this whole piece of price, Kelvin's the one that got closest to it. Okay, so let me remove everything here for a moment. Think, okay, for a minute, let me highlight the points. We've got point, we've got point, point, point. Right, so we got these points. And frankly, I mean, to be fair, if I'm being really anal here, there's this one as well. Right, so these all represent major inflection points. Yeah? Does everybody agree? So that here is the inflection point I'm looking for. So then after we've been able to assess this chart and work out where that first major inflection point is, what are we doing at the moment? Look at this piece of price action and tell me what we're doing. Exactly, man. Yes, exactly. We're coming up for a potential price retest of a major daily inflection point. Now, I'm not going to sit here and say, oh, it's going to retest and go short. That's not what I'm saying. I will never say anything, you know, I will never guarantee anything in the markets. And so I'm fully aware that regardless of the fact that we are retesting this, that the retest might fail. The retest could fail and we could trade long and we could go long for the next 50 years. Anything can happen. That's the amazing thing about the markets, right? But we've got to think about the probabilities. And the probability at the moment of a success of a long is much reduced in comparison to a short. Because of what? Why are we much reduced for the success of a long over a short? What don't we have for the long that we do have for the short? Right on, Nadia. Yeah, good. Yeah, well done. Yeah, Nadia's hit the nail on the head. Because we have the path of least resistance. Because we don't have major inflection points directly above. Now, you might turn around, you might be like, yeah, but hang on a minute, Max. We do have a big inflection point, right? Because we got this one in here. Okay, now, and you wouldn't be wrong. You're not really wrong. But then this comes to a case of prioritization. If you had a scale of 1 to 10 and you had to prioritize your zones, and the way I've taught some of my students in the private tuition sessions is to color gradient their zones, because this helps them visually see the importance of the zones that they're using, which is, you know, help them with their trading. We would have this one as a bright red zone because it is more powerful than this one down here. Why is it more powerful? Because it's been significantly more established. Because price action, since it's in development here, which was on the 9th of October, has been hit many times and has, for the most part, kept price action from traversing any lower. Which means, what does it mean? Let's think about the science behind it, behind the scenes. When we look at something like this created, and we look at the sizable move that we've had, and the asset's value has jumped from 82.80 up to a point here at 84.30, what does it mean is here? Yeah. Money. Cash. A lot of it. Exactly. A lot of it. And so really then, we've got a couple of options. We've done all the work now. We've been able to provide a really solid, all well-rounded assessment of this asset. And we've got a couple of options available. Of course, we have the margin we haven't spoken about, which was given by most of you guys in between the 83.50 and the 83.70 area, which was the zone that was going across there, if I remember correctly, something like that, for example, which is one that three of you gave me. And then of course we have the area down here. So the options are as follows. We have the breaker structure or break close retest, whichever one you would prefer to utilize, between 83 and 83.45. And that's going to yield you between a 1 to 2.5 and a 1 to 3. And you would be following the path of price that's happened multiple times between these two areas. It's got a higher success rate than it's got a higher chance of success than loss, is what I was trying to say, sorry. It's not perfect, but it does have a higher chance of success than loss, trading between these 2 points. But then you also, if we go up here to the daily or the 4-hour time frame, whichever, and we look at that point down at the lows there, and we look back in time, the next major inflection point is the order block that was formed down here at around 81.40 to 81.50. So then, if we have this area in here, highlight the order block, we have the margin. Yeah, no worries, mate. That's fine. My NAS 100 was a pending order, so we'll check that out in a moment. So if we have the space in here, we then have another new trading margin. So we can clear out this rubbish. Now, the break of structure entry for a trade idea short is going to be where? Looking at this piece of price action. So you guys have got all the facts in front of you. Where would an ideal break of structure point for the entry be for a short in the NZD CAD? $82.33 straight off the bat. 82.33. Okay, yeah, I see where you're going with that one. Yep. 82.33. Yep. Okay. Anyone else got any ideas for a breaker structure entry? $82.20. Okay, closer. See, I've already got my eyes on the point, right? So I'm just waiting for someone to give me the number. So I'm looking for something a little bit less, a little bit lower. Think about what you're looking at. Look, let me zoom in even further. Look at where we're looking at, right? Where would we go? Where would we get in if we wanted to clear out all of the potential technical risk? 82.09. Yep. On the money, mate. So 82.09, which is this area in here, clears out the vast majority of technical risk for the short. Now, we've got a margin down here, don't get me wrong, but we are talking about high probability setups. And if we're looking to take the trade down to this area in here, then that is the best entry. Because when we've come down to this point in the past, we've hit it with a doji followed up with a very nice full-bodied series of candles. So that again means that there is money down here sitting in the market potentially. Now, we haven't been down there for a while, so the likelihood is that institutions still have cash in the NZD CAD from back in August. Very, very unlikely. But the fact of the matter is, we want to be absolutely certain that there is no institutional cash maybe being placed in the market as we head down further for that bounce back. And what I would expect to happen, and I don't mind revisiting this with you guys in weeks to come, is this kind of thing happening. So often do we have a breaker structure point at a certain level because it is the exact level that price action comes to before hitting that turning point to retest a level of liquidity. So by executing a breaker structure trade like this, we've already got the additional entry criteria on side being the BCR, which then adds confluence to the trade idea that we're taking and increases that confidence level. So that would be the trade idea short. So the NZD CAD at the moment is a bit of a rock and a hard place for me in a nutshell. I would take the longer between these two margins here, and I would take the short between these two margins down here. This area in the middle is essentially acting as our NML, which is the no man's land, and it's a big one, but it is the NML nevertheless. Right, ladies and gents, we are at 7 minutes past 2. The US Open is around the corner, so I'll stop that one there. I know a lot of you guys, you are well equipped to handle that kind of stuff, but I hope you appreciated the bit of a deep dive on the NZD CAD there as well. It's always good to dust ourselves off, I find, and have a little bit of a recap session. So let's get going down here and check things out on the US markets. Oh, well, that's great. Yeah, that's great. So nice loss in the NAS 100. So that's going to be a 0.25er off of the win in gold, which means we're probably up literally nothing, like 0.2 or something for the CPI today, but that's fine. That's fine. So this afternoon then, team. Thanks there, Kelvin. Really trying to rub it in as well, aren't you? Oh yeah, check that DAS trade, Max. Hey, rubbing it in when I was mid-flow. Appreciate that, mate. So this afternoon, margins are going to stay relatively the same. Margins are going to stay relatively the same as we've traded this afternoon for the CPI event. I'm not really going to change too much. Yeah, especially in this NAS 100, guys. I'm not going to change bloody anything. I think these margins are really, really good. I mean, look at where we've come up to, right? Came up to this area here. Big sell-off. Yeah, unfortunately, we did take the hit on this area. But I think at the time the market opens up, I'm going to use the exact same trading margins yet again. I think I would probably be even more confident actually removing these and just trading the whole damn thing. So that's what I'm going to do. So it's not really much work required in this NAS 100. I mean, frankly, guys, the long breaker structure point for the NAS 100 is going to be in here. So then your entry is going to be at around 21.12, target 21.15.60, and your stop loss at the 50% point maybe down at around 21.11, for example. And that's going to be a nice yielded position. And then for the short, the breaker structure point is going to be high, low, low, high, low. So if we run the level, just so everyone can see, just like that, that's your entry. Now, this doesn't come without TRF. This here is a bit of a TRF there, to be honest. But we didn't actually have a failure as a result of it. The market just came back down to the open and then came back up again. So I'm still feeling pretty confident. This is a nice level for an entry point for that short. So then we're going to look at the short. It's going to be an entry there. Target down at the lows there. And then the stop loss is going to be at sort of 50% point of these two areas. I mean, that's yielding a 1 to 4 at the moment. Frankly, that's a bit too much for me. I get uncomfortable with anything over a 1 to 3 usually. So yeah, I'm actually going to increase the size of the stop loss on that to 1 to 3.3 and have that at around 21.093, which gives a really decent margin there. Account for any potential buybacks or bounces or wick throughs or anything that may happen, we've got this point of liquidity in there as well, which is nicely inside the stop loss, which is the base of the M reversal there. So I think it's going to be pretty good if that takes place. So that's that. We also have the buyback opportunity as well, folks. So if the market comes down to this big point of liquidity, we do have the option of buying back based on this breaker structure in here. So that's that one. So then what this looks like is the market traverses all the way down. We come into liquidity, and that's non-negotiable. The price must reach the money. Once it reaches this area, we then look to get in after the price breaks through up there. And then we take the trade right the way back. And frankly, team, again, I'm going to be taking the trade right the way back to the top. There's no point putting a trade panel in there for this afternoon. That is just what I'm going to be doing. Okay. And that's that. Same, we've already done the long there. That's the short. Another long from the lows as well. So that's the NAS 100. For the Dow Jones, it's a slightly different picture, but not hugely. The only problem is the short, as far as I can see here initially. So this area is directly in the way. So the short is going to take place after price action breaks through that level, which means the true trading margin is going to be there. Now, a breaker structure point on top of that one is going to put us in probably about there, I would say. Yeah. So that's going to be the breaker structure point for the trade, which then makes the trading margin sitting between here and here. So that's going to be your US 30 Dow trade for a 1 to 2.5. The long at this moment in time looks scary. I'm not sure. I mean, really, it's just going to be going to the previous high, isn't it? That's really what we're looking at. But the only way we can take the long is after the price comes back down to retest this area in here. Whoops. Thank you. Yeah, retest this area in here. So we need to come down, retest this, then break structure and go up. If we get a break close and a retest of this point, we have the capacity to trade higher to this point. But it must be a break close and retest. Okay. So the breakout, close, retest, continuation up to 44.16. Now, most of these stock assets today are at break even. A lot of these, they can close in excess of even 2.5%. So be warned, it could be huge. Then again, it could be a complete non-impact event altogether. So yeah, that's pretty much there. All right. So that's it, guys. I think I'm going to wrap things up there. That's it for today's session. I hope you've all enjoyed it. If you've got any questions at all, please post them into the general chat. Not this chat, but the general chat room afterwards. And I'll be happy to get back to you on those. I'm going to get ready, grab a coffee, and take 10 minutes to give my voice a rest before getting into the US markets this afternoon. But it's been a pleasure as always, guys. It's been a good afternoon, regardless of the fact it was a bit of a lack of stuff going on for the CPI. And yeah, I hope you have a really good day today. So take care, team. Have a great one. Trade safe, and I'll see you then. Thanks a lot. Bye-bye.